Alright guys, so I hope I'm not talking too soft. It's kind of late right now where I am, and well, I'm tired. It's nighttime, and I really don't want to just. I feel like I'm yelling if I talk in my normal voice, so I'm gonna kind of whisper a little bit, or not whisper, but just talk a little softer than I normally would. So I hope that doesn't affect the video too much. Anyways, first and foremost, I want to address a question someone asked me on the Brooks price action. And by the way, if you want to ask me a question, the easiest way to ask me a question, number one, is to just send me a private message on brookspriceaction.com. That's Brooks. It's if you want to actually, it's brookspriceaction.com, and my username is BC Wolf. You can just find it, or go to the you got to create an account, but go in there, log in, or reach out to me on YouTube. I'm assuming that's probably what you'll be watching this video from. Or you can reach out on my, the e-mini analysis that I do in the trading journal. But anyways, I have a question I want to address real quick, and then I'm going to talk just kind of really about, the path. If I could go back a few years, what I would have done differently in terms of starting out. But I'll get more into that in a few minutes. So this question this person's asking is, they ask, first of all, appreciate your videos a lot. Thanks for the effort. And, I like making videos, so I enjoy helping, but at the same time, honestly, I just enjoy talking about the trading or the price action. That's why I do it. And plus I really appreciate Al. I really commend him and respect him for what he's done for me. Just the information he's given me is, I have no words for it. It's just I wouldn't be where I'm at without him. So it's kind of I feel like I feel like I'm somewhat obligated to try and reach out to people as well. And I've said it before, but I think that's the same with anybody. If you're really good, well, I want to be careful saying that, but if you are if someone's helped you along the way, I think we all have an obligation to help others. No matter what it is, we have an obligation to somehow to help in any way we can. And it doesn't matter if you're whatever thing you're passionate about, whatever thing you enjoy, you're obligated to help others, and that's just the way I see life in general. It's it's just part of human nature. I think it's we're we have a desire to help others, and I think that's just part of it. Anyway, I don't want to get too sidetracked. Um, it's kind of late, so I think about a lot of different things. But anyways, this person asks, he's asking about inside bars and III patterns, IOI patterns. So basically, what he's asking is 2 inside bars, 3 inside bars, or maybe 1 inside bar, 2 inside bars, then inside outside bars. And are these patterns also depending on context, like an outside bar is? So let me just read the question. He says, one question I have is if you want to, the actual. Okay, so one question I have is about consecutive inside bars, 3 inside bars in a row, or an outside bar surrounded by 2 inside bars. Are these patterns also dependent upon context, like an outside bar is? So, depending on context, one trades. Sorry. So, let me first address that. He's basically asking, do inside bars, inside bars, do they depend on context? Absolutely, they do. Everything depends on context. If we search hard enough in here, we're gonna find a lot of inside bars. Here's an inside bar, inside bar, inside bar. It's two inside bars, an inside bar of this bar and an inside bar of this bar. Well, tight trading range. So if we go above it, guess what? We're probably gonna find sellers. Here's two more. Well, technically here's two. Well, not really. Here's an inside bar. Here's an inside bar. It's all about context. Inside bar is simply a triangle. When you get in three inside bars in a row, for instance, this is basically, it's some form of a triangle. If we search really hard, maybe a 20-minute chart, it's close. If I find the right chart, there's one that's gonna be out here, maybe a 14-minute chart, or yeah. See, here's it's getting tighter. It's let me put it this way. Let's start with inside bars. Inside bars are triangles. It's trading range price action. So when you get a big move down, here's inside. It's basically a triangle. Here, it's basically a triangle. There's a lot of buying pressure developing. What happens? The reason you get final flags that reverse. One reason, and the easiest explanation, is you get bulls who will buy this low, and they'll use a really wide stop, maybe down here, maybe at this low. So they buy here, stop down here, and then they wait. They wait for a bull bar, and maybe they buy more here, or they buy more here, somewhere in here. Then they get out at their original entry, or they hold. Same thing up here. They buy, they wait for a bull bar. Maybe they buy here, maybe they buy down here, and they get out at their original entry. That's how channels work. But it always depends on context. Here's the deal. This is kind of the easiest way I can describe it. There's support and resistance. So here's the open. We gap down, obviously, went sideways, new low, and we rallied. Here's all your inside stuff you're talking about. And I don't want to say it's noise, but it is, because it's never noise, but it's agreement. We're fighting to, price is trying to break above this high. We're trying to form a double top on over here. Well, we already did that and then we sold off, but you can see it's a double top, breakout, pullback. So prices, just look, price is it's continuing to go sideways. So I would not, it's a very broad question, and I'd love to talk more about it, but the truth is, yes, it all depends on context. So let me carry on with this question. So depending on context, one trades inside bars, inside patterns with trend or as a reversal, or are these only to trade with trend or with reversals? Okay, so, and then he says, this is one thing which is not clear to me, by the way. I've read out, and he says, by the way, I've read out all of Al's books. Yes, so that is the classic. He's basically saying, do you trade inside bars, outside bars, the same as you would trade them? Do you trade them the same as you in a trend as you would in a reversal pattern? Well, yes, in a way. First, let's find an inside-outside pattern. Here's one. Well, I like this one, so we're going to use this one. Basically the same. The context is the same. So here we have a bearish sell-off and then a deep pullback. But again, I'll review this day in a minute. But just where it's strong, but it hasn't broken above the high. So arguably bears will sell up here. Here's a stop entry short. So let's assume that this bar went one tick below, and then I sold, I put my stop up here. Well, let's assume this bar went above this bar. If it would have, so it would have triggered, it would have gone up, stopped me out, and turned back down. Well, the reason people say is IOIs or second entry shorts are reliable is that's exactly what they do. If I would have sold here, it's basically, it's not exactly an IOI. So, but what I'm saying is the whole concept generally is you get a signal bar, it triggers, it stops you out, and then it gives a second entry. Trying to find one, honestly. And I'm sure y'all have seen the video. You're probably screaming, "There's one right there." Sorry, excuse me. I mean, I know I probably skipped plenty of them. I'm just not really finding them. They are. I can't find any, but here's basically the whole premise. You get you get an inside bar. It's a stop entry buy. You buy above. So if I bought this bar, look what happened. It immediately turns down and stops me out. Well, if I had my stop down here, I got stopped out. Well, now, so it's an inside bar, it's gone outside, and then it's turning up. So just pretend for me that this bar did not fall below this bear bar right here. Well, it's a second entry short, so I've got to buy again, more likely than not. It's one of those things where you've heard I'll say it a million times. Traders will buy here, they'll get stopped out, and then maybe they'll buy again or double their position. Other traders they'll buy above this bar and use a stop down here, and they'll wait, or they'll buy more above. It's kind of an either or thing, you know. It's kind of like if let's say right here, if I short below here, stop up here, I'm either going to do that, I'm going to sell, and honestly, I'd get out above, but if I didn't, I get stopped out here, sell on the reversal. Or I sell here, and I use a stop, maybe a measured move up, and wait. But anyways, I don't want to get too much in it. It all depends on context. Don't buy high, don't sell low. Nah, I'll have to go more into your question in terms of reversals and trends, and honestly, it's too late right now for me to do that. So I'm going to kind of speak in generalities. In general, most reversals fail in a strong trend. So yes, you're going to get a lot of inside bars, and if you're in a bull trend, you're going to get a lot of bear inside bars, and they're potentially going to look really good. You know, kind of like over here, these are so clear. You know, here's inside bars, but would you sell it? No, you hadn't had a bear bar and all the way since over here. You know, here's an inside bar, but pretty strong trend, probably going to fail and turn up. So yes, I hope I'm being clear. Reversals, you need a trend line break. If it's in a trading range, it's a little different. You can sell, you know, if you're at the top, you can sell O2s. It all depends on the context. Context is king. And I'll speak more about this at some point. But in general, if it's a strong trend, you can buy for any reason. If it's a weaker trend, such as a broader channel or a tight channel, you got to be more careful. But it's still, you can buy for any reason as long as you use a wide stop. And yeah, that's all I'm gonna say about that. And reversals, again, you know, tight trading range. You know, we rallied up on this day, and then we tried to sell off here. You know, does that mean I sell below here because we broke to the upside and turned down? No, we're selling at the bottom of the trading range. If anything, I should buy more down here, or put a stop down here. So it's all about context. You got to remember, the reality is most computers are looking at this. Most people, you know, they're looking at support and resistance. They're saying, you know, they're structuring their buys over here. This is going down because a lot of traders are saying, yeah, I think we're going to reach this low, so I'll buy down here, you know, scaling lower. Other traders are saying, gee, you know, we haven't tested you know, we broke below this trading range low. It's actually somewhere down here, and we broke below it. We're retesting it here. I'm going to buy, knowing they're probably going to turn up in a trading range. We're trying to break below, it'll probably fail. It's all about context. All right, next thing I want to talk about is, well, I'll talk about a few days real quick, but I'm gonna do them very quickly. So, all right, we'll start with, I did not trade. Yes, I did. I traded this day. I did not trade this day. I was busy. So I ended up just not trading that day. But anyways, let's start with Monday. Monday, pretty interesting day, but great lessons about channels. Spike down, very tight channel, so you have to always be thinking, maybe 50%. We got a breakout, bad follow through, we got another sell off. So from this high to this low, look, we're trying to test 50%. The reality is, think about always in. If you sell here, because it's always in short, you got a gap down. You've got a lot of tails at this low, so this sell signal below this bar is not as good as this buy signal, so it's probably bears get out. And then you get this low one short. It's clearly bad. It's bears get out, bulls get in, and then you get two-legged rally. So leg one, pull back leg two. You got a low two short. It's a double top with here. It's a wedge, first, second, third. Failed breakout of the moving average. Failed breakout of the 15-minute moving, or I'm sorry, the 60-minute moving average. There's a lot of resistance up there, so it's okay to get out and probably go short there. This is clearly the best so far. It's the best signal, always in short. Bulls definitely get out. If anything, I would sell below, stop up here, or wait for 3 bear bars. So you have 2 give up bars, bears sell, stop up here. What do bulls do? Do bulls get out here? No, it's a second entry buy, but tight channel. Then here, well, it's a wedge, 1, 2, 3, but fairly tight channel. First up may fail, but you're in the support area. We fell below this low, we're charting up. I think it's okay for bulls to get out, but if they do, for bears to get out, but if they do, they got to get short again. And what do? Well, very deep rally. This happens a lot, where a lot of times in a channel that's not that strong, you're going to get things that reverse rather quickly, and they don't have a good signal. So you'll have a lot of bears that are trapped. But this should be a warning. Look what happened. We fell below the low and returned up. If this bar would have looked like this bar, being an inside bar of here, I would have gotten out. But the issue with, this is the classic always in. What do you do? And this is the classic question is, what do you do when, you get this? I don't think a lot of traders would. Sorry, I had to check my phone. If you're short and you sell and you buy back a short here, you're buying at the moving average, so you're buying high. More traders will sell up here. It'd be different if it looked like this, but bad follow through at the low of the day, so probably trading range. I think a lot of bulls will get out. Let me just real quick state it this way: always in short, bears get out, bulls get in. Bulls get out, bears go short, aggressive bears go short, bears sell here, maybe they get out, but if they do, they got to get short again somewhere below this bar, below here. Then they get out here, bulls possibly go long, or they wait for a few bars. Do they get out here? I would not. It's big risk, big bar, very tight channel up, first down should fail. What about here? I think it's okay to get out, but if they do, they got to get back in. And what about over here? Well, we had a breakout above the highs, consecutive tops. So we have a low 1, low 2, bull breakout, low 1, low 2. So it's technically low 4 short. Bulls definitely get out here. Strong enough breakout for the first reversal down to fail, and for a second leg up, but clearly it's failing. We're failing to get above the 60-minute moving average, and we're still above this lower high. And so we're starting to sell off, but again, the sell-off's weak, bear breakout, bad follow through, dojis, and then reversal bar. Here, what do? What do always in short bears do that sold up here? Do they get out above here? I'd get out above, even though we'll have a deep pullback. Probably 50% pullback. Whenever you get big bars, often you get 50% pullbacks. We kind of, and it's just because the risk is big. But if anything, bulls buy above, bears definitely get out above here. It's a second entry buy. And this is I kind of see this as an IOI pattern. This other person was talking about. Bulls will buy, or price goes down, it triggers, and it gives you a second chance to buy. And then bulls probably get out below here or below here. But anyways, big risk. I think that pretty much covers today. It's a trading range, And the reality is, you're going to get 50% pullbacks at trading. When you get a trending trading range day or a trading range, they can often be many things. They can be channels. Think about it. A trending trading range day is a channel. So let's move over to here real quick. This day was rather, I thought, kind of fascinating. So gap up, but we reverse down hard. What do you do? I think it's always in short below this bar. And if you take it, I think your stop's up here. What do you do right here? Well, this is that classic question of, it's hard. This is the dangers of selling a bar that's big. You're very close to the moving average. So I say it's always in short. And I say that because if I had to do anything, I would sell. That doesn't mean I would sell. And here's my issue with selling. 1-to-1 risk reward is below the moving average. So by the time we're here, it has to get below the moving average. Here's 2-to-1. So it's not a great short. It's tight channel up. But there's no way I'm going to buy. It's limit order market. The bears sell. They sell more above. They sell this high. They sell more above. Bulls buy here. Scalp out. So where do you go short? Well, a few options. Maybe you sell below here. Maybe you sell that close. It's a micro channel. Bear breakout. Big tail. Bad follow through. And notice right here, we fell below this low and we immediately turned up. So, this is always the tricky. It's always tricky. And I equate it to the 3-bar rule. If you were in Al's room today, you heard him mention about this. So it's kind of the same thing. Always in short, bulls get out here, bears have to get short either below this bar or below here or on this close, but if they do, they get out right here. Well, the reality is nobody wants to sell this close and get out with a 3-point loss, but you know what? That's part of trading. And when you learn to do the right thing and not care about it, you'll do better. So let's go back. That's kind of how I see it today. I see it like this. Sure, in a perfect world, we would say, bulls get out above, or bears get out of shorts above this bar or above this bar. That's tricky because it's a lot of bars down, and we'll probably get a second leg down. So it's not fair to say that, but you have to be aware. Big tail, bad follow through, and we're reversing up below here. So on a 15-minute chart, sorry, I've got to pay attention to what day I'm moving. Okay, I thought it was the 4th. So it's around 9:20. Okay, I was right. Yeah, so look right here. Here's what that reversal looks like. So bear breakout, fell below here by a few ticks, turned up. Great buy signal. So you have to be careful about that. But if you don't get out here, you've got to get out on the 3rd consecutive close. And what do? Well, do you buy? Maybe, but you've got to be aware that you're buying at the top, and we never got it, but always in short, bears never got a chance to get out. Well, I'm sorry, sell the close, bears never got a chance to get out. So you got to be aware of that. And then we sold off. But the same thing, if you sell down here, you get a little more down and get punished. I want to see something. 48, 7, 46, 45. Okay, so you probably try to go 3 points down. So, this is one thing that really fascinates me. And this is pretty close to today. It's not quite, but it's close enough. Strong sell-off. Bear breakout. Then we rallied strongly up. and then we just collapsed. And that happens a lot. And when it does, sorry, sorry, you know, it traps a lot of traders in because it's a low probability event. So you got to be aware of that. You know, there's always a chance that look what happened up here. We broke above this high, turned down. We may try and do the same thing. We broke above this high, yesterday's high again, turned down. That happens a lot. You know, a lot of times you get retest of things, go up, turn back down, retest it again, higher probability. But again, you got to be aware. You know, you got to ask, why didn't we? You know, why did we go? We went back down, going back up, and why didn't we? And another thing, why didn't we close strongly above this high? You know, that's all factors, and it takes time to be able to just think like that. But again, we sold off, so it's all back to always in short. But the reality is, bottom of the trading range. And another person asked me, I think I made a video over about always in being a scalping method better than the swinging method, or that if you swing always in, you're gonna get hurt a lot and all this. And these days are why he's saying, that person's saying that. You've got to understand it's a trading range. I need to scalp. I need to buy low. I need to sell high. So if you're selling down here at this low, you've got to be aware of saying, okay, this probably will fail or very well may fail. So if I get this, I need to get out, especially here, maybe here, and then maybe I sell again up here, or maybe I sell during this bar. But that's the truth. And then you get, bad follow through, big bar up. So what do you do here? Well, I think you honestly, it's hard. I think you get out. I mean, look at this price action. I know I said over here that a lot of bulls would not get out, or a lot of bears would not get up above, but it's different here. We sold off, reversed strongly up, and now we're selling off again. And we very well may test this high. And honestly, I think we will. A lot of people were questioning, is this a bull breakout and a deep pullback that falls below the low and turns up? And I think it will be. And then look what happened there. We broke above and immediately turned down. This is no coincidence. It's computers who buy here. Maybe they buy this low and they get out. And then we're going sideways. And then now, really bad, really dangerous always in the market. Got to be careful. Maybe you sell down here, but again, if you do, you've got to be aware of this. And then, so decent sell-off, but again, minor reversal. Probably have to have a double bottom, and that's why, bulls didn't really buy it. And then we got this big bear bar. So a lot of times this happens. Bear breakout, bad follow through, and another bear bar. Well, channel down, we'll probably reach these lows. So if anything, always in long, bulls get out. Sorry, bears get out, bulls get in. But then what do you do? Well, this happens a lot. It's a trap, in my opinion. But it happens. I think we'll get back to here. Reasonable to buy, but if you buy above, you've got to use the wide stop and you buy more lower. Your entry is 450, 350. Yeah. And then you get a low too short, but again, this is the target. And, well, we didn't reach it. But at some point, you got to be careful. Strong breakout. You only break above the moving average. Next question is, I'm sorry, I'm getting pretty tired. So I may have to stop this video earlier than expected, but again, we may not trigger this buy. We may not come back to this buy. Maybe this was the reasonable buy, and I think we'll clearly get back to here. I'm less certain now we'll get back to here, but we might. I think we will at some point, but we may not be able to before we close. And look what happened. reasonable targets up here, and especially here. And we got back to it. Always in over here. I'm just going to state it kind of briefly. Always in long. Buy anywhere up here, but again, very weak. First down should fail. It did. Now we got a second entry short, decent sell. I think bears sell here, but if they do, what do they do here? Do they get out? Tricky. Maybe they get out above. But if they do, and really the next thing you do is you buy a period, you get out, or you hold, and then it's back to always in long over here, double bottom, failed breakout below the low, and then where do bulls get out? Well, probably here. I wouldn't get out below here, below here, below here, below here. You're riding the moving average up, and we're testing above. We failed to break out of these highs. So I definitely get out below here. Decent bull, best looking bull bar of the move. Bears get out, bulls get out, bears get in. Then what do they do here? Well, I think it's strong enough breakout for a second leg down, but this is tricky. I think it leads to more sideways than anything. Bulls definitely get out. Bears definitely get up above here. Second entry buy. It's the moving average gap bar. We haven't had a close below. We haven't had an entire bar below the moving average since over here. So if anything, I'm buying stop. Maybe somewhere down here. I wouldn't get out here. Maybe you do, but I don't think it's really that great. And then the reason I say that is not a good signal bar. You're selling right at the moving average. Bulls have been buying it all day. It's a limited order market. You'll make more money buying the limit orders and scalping out. Then we got that. What's the next thing? Buy here. Maybe you get out here, but if you do, you got to get long. Probably above here, but I don't think you do get out. Bulls definitely get out here. Look what happened today. New high today, sold off. Bull breakout, bad follow through. New high on the day, starting to sell. So this is kind of that situation we've been talking about with right here. I can just look at it from over here. So bull breakout and then reversal bar attempt. Bulls either get out below this bar or they wait for another bar. Or here, I think look what happened to this tail. This tail tried to reach this close, so bulls buy this close, disappointed, and they try to get out of break even and they can't, then we sell off. I would get out below here. To me, what I've learned that works best for me is when we're close to some sort of trading range, or if we're in a trading range and we're close to an extreme, I have no problem getting out. And especially, let me restate that, especially when you get a bull breakout that looks like a second leg trap. Breakout, pullback, second leg trap. We had a couple of those, maybe this week, probably last week. And, it was a kind of a big mistake I made. Yeah, it's over here. It's a mistake I made. And let me look at the 28th, see what day that was. I was a little busy this day. I remember I took a few trades, but I didn't trade the whole day. Bull break, I remember now. So I actually bought over here, or I think I bought above this bar. No, okay, I bought above here, got out below here, bought again, and the reason I'm explaining this is here's the biggest mistake I made, or one of them. I was long, ended up getting out up here. I remember I had something to do, but it was still a mistake, regardless of the time. First down should fail, and I was thinking, yeah, it's second entry short. I don't want to give back what I've made, and blah, blah, blah. I should have held. And when I got out, I had a chance here to buy. I didn't see it, but that's, sometimes that happens, but at the same time, I shouldn't have gotten out. And then we, strong breakout to the upside. And my thought was, is this a second leg trap? Well, it might be a second leg trap if we get a bar like this for the follow through, but we didn't. And we usually go for a measure move up. So now I forgot just the fascinating price action we had over the last week. Great swings. So when we get this, it'd have been better. Strong. Oh, I'm sorry, I'm over here. I hope I wasn't jumping all over the place. I've been kind of. I'll be honest. I'm just getting tired. But oh yeah, so second leg trap, 2 legs up. Trading range days, you often get strong breakouts to the upside with bad follow through, strong breakouts to the downside, bad follow through, 2 legs down, second leg trap. And that's typical in a trading range, and it's vacuuming. We're vacuuming to this high. It's a double top, and then traders sell it, we sell off. All right, for today, always in short below. Bulls, bears got to get out above. Bulls go long, but if they do, it's back to short over here. So personally, I would sell, get out of shorts, and maybe try and sell, or sell this close, or sell during. But if I did, I'd probably get out above here. If I didn't, I'm definitely getting out on this close, and I'm gonna try to get long. You buy here, you buy this close, buy here, buy this breakout. We're probably going up for a measured move, so do something. And then bulls, maybe they get out here, but even as Al said, there's no need. Probably because the reason he says that is we'll probably go sideways into the close. So I hope this video helps. If someone, I want to talk more about kind of my thoughts on people starting out and what I would have done differently. And I'm not going to have time right now. I need to go to bed. Whoever's watching this, please comment. I'll try and remember, but go ahead and, either, as I said, send me a message, comment on this YouTube video, reach out to me any way you know how, and remind me, just say, hey, could you talk about, or say, hey, Brad, could you talk about, what the best way to trade, or say, asking, hey, Brad, could you talk about what the best way to trade and what you would have done differently starting out. And it's going to relate to trading smaller, trading always in, and honestly, maybe not starting on the mini. But go ahead and ask me that if you want to hear more about that. I hope everyone has a good night or good morning and a great trading day tomorrow. I don't know if I'm going to make a video tomorrow, but go ahead and I'll try and remember that, but go ahead and remind me, whoever's watching this video, and I'll make it very soon about what I was going to talk about. All right, hope everyone has a great weekend and a great trading day.